fractional shares can be a godsend, but they can also come with risk. Well, in this video today, we're going to discuss this very point, as well as answer this question from a great comment that just was left on the channel. Will I still get paid dividends if I own a fractional share? And are fractional shares actually good to own, or should I just save up and buy a whole share? I guess you could say fractional shares are somewhat new to the overall investment world, but typically what a company would do to keep its stock price attractive to brand new investors is they would do something called a stock split. Now, for example, Tesla. They did this 2 times in August of 2020 as well as in August of 2022. So what the companies do is that they issue more shares, which ultimately gives you more ownership, but it also reduces the overall stock price. Then that attracts new buyers to say, you know what? I'd rather pay $200 a share than like $1,000 a share, and therefore they get more investor activity. So for example, if Tesla announced a 5-to-1 stock split like they did in August of 2020, and you owned 1 share at $1,200 per share, you'd now own 5 shares after the stock split, and the stock price would be reset to right around $240 per share. Now, your overall portfolio worth, it's still the same. But now the new investors see a $240 price tag for 1 share of Tesla, which is much more attractive than $1,200. Now, this used to happen a lot back in the past, but now with fractional shares, it makes things a little bit easier. Now people can invest whatever they can, right? Like $500, $200, even only $1 to own a particular stock or ETF. After all, imagine if you wanted to buy 1 full share of Berkshire Hathaway. They've never done a stock split, and right now, the going price for 1 share, $459,900. Now, there are some risks that come with fractional shares that you need to be aware of to be a great investor. The first point is how you actually buy your fractional shares, and the second is how your brokerage actually gives you the fractional shares. Let's start with the first point. Now, in brokerages such as the newer ones like Robinhood, Webull, things like that, you can buy fractional shares with as little as $1. And actually, I'll show you an example to make it easy. Here's my Robinhood portfolio, and you can see my buying power at $323. That's like cash I have on hand to buy stocks with. Now, what I'm gonna do is I'm gonna search right up here at the top for KO. That is the ticker symbol for Coca-Cola. Click on that, and right now the going price as of the recording of this video is $59 a share, but I don't got $59 that I wanna put into Coke. I just wanna buy a fraction of a share. What I'm gonna do is hit trade, and then I'm gonna hit buy, and I'm gonna put in $1. Hit review, swipe up to submit, it's gonna send the order, and boom, it's done. Now I have a total of 0.016679 shares of Coca-Cola. This can be seen if I go into the stock now. It says here's my shares, my market value, my average cost, and so on and so forth. Now, if the price continues to go up, which means this $59, if that keeps going up, my $1 could eventually be worth $1.05, $1.10. I'll also get all the dividends, and I'll share with you a tool that you can look at to determine how much you're gonna get in dividends a little bit later. Now, even though Robinhood and Webull lets you do that, not all brokerages have the same effect. Take Schwab, for example. Another brokerage that I use and I have a lot invested in, but with Schwab, they don't offer fractional shares in the same way. You can't just go in and put $1. They have something called stock slices. And with that, you gotta invest a minimum of $5 into a select number of stocks, and that's how you build up your slice of the pie. So it's a little bit different than your typical brokerages that truly offer those fractional shares. Now, the second risk is the timing, and this is a big one, the timing of the fractional share. This is really, really important. There are 2 ways that brokerages ultimately let you buy fractional shares. And the big risk here is how you want to take advantage of the portfolio. Let's say your favorite stock, for example, it's having a tough day, and you want to take advantage of the dip, and you want to buy at a discounted price. Depending on the market timing, you could get totally screwed with that, and how much the stock price is going up and down in that particular day that you want to buy. Now, what we just looked at with Robinhood, that's what we call real-time trading. Here's how it works. When you buy 1 piece of a fractional share, the brokerage basically takes a full share from the clearinghouse, but then passes on the fraction of what you ordered, and they keep the rest of the fraction on their balance sheet for, of course, times that additional people buy into the rest of the fraction. That's a great way to set a limit order so you can take advantage of the stock going down in a particular hour or day. And of course, Robinhood and Webull and some of those new brokerage apps, they offer that real-time trading so you can take advantage of buying when you want and how you want throughout the stock market day. But the second one is called batch trading. Now this one's tricky because what the brokerage does, they pull together all the different orders, and based on their designated trading window, that's when they're going to go out, fetch the shares, and pass them along to you. So, for example, if you want to take advantage of a dip, let's say your favorite stock goes from $100 down to let's say $90. Well, what could happen is you put in your buy order when it's $90, and by the time that batch trading window comes around, let's say the price goes back up to $110. Well, now you kind of got screwed. You didn't get to buy the dip, and actually it's a little bit more than it originally was with your $100 share. So if it is a volatile stock, such as Tesla, that could be a big deal to think about. An example brokerage of batch trading is Stash. What they do is they have two trading windows in the morning and two trading windows in the evening. And same thing with M1 Finance. They have a limited trading window and they'll batch all those orders up and send them out. Now, if you're a long-term investor, you don't really care about the stock price. You're not trying to buy the dip, you're just putting your money in on a regular basis, then this really doesn't matter to you. But if you are somebody that wants to take advantage, even on a fractional basis, you got to keep in mind what your brokerage app does. Now, let's talk about dividends with fractional shares. Now, as I mentioned earlier, when you have fractional shares, you will still get dividends based on how many shares you own. But I got a free tool for you because I like passing on little things that you can use to kind of calculate where you sit. Many different ways you can calculate it, but here we are on Google Sheets and I will pass this along to you, link down below in the description. Now what you want to do when you click on the link, do not ask for access. You want to actually go to File and then hit Make a Copy. That way you can keep it for your own, edit it all you want, download it, put it on Microsoft Excel, whatever you want to do. Here's what we're looking at. And right now, the green boxes are what you want to fill in, and the gray box will be automatically calculated for you. And what we're trying to find out is what is our total actual payment based on the fractions of shares that we own. Anywhere from less than 1 share to 1.8 shares to 555.234568 shares. You're going to be able to calculate your estimated dividend. Since we bought some Coca-Cola, why don't we play around with that? So if you go over here to Seeking Alpha, here I am on Coca-Cola, I'm going to click on dividends right here, come down here, here's the last announced dividend. Now, the payout date will be on 4/3/2023. Now let's say I don't buy any more of Coca-Cola. I put my $1 in and I'm not going to touch it past the ex-dividend date. I'm not going to add any more and I'm not going to sell anything. So the dividend per share that they announced was 46 cents. And again, I got that over here on Seeking Alpha, right down here at the bottom, 46 cents. So I'm going to plug that right in here to the fractional dividend calculator, and then I'm going to type in how many shares that I own. In this case, on my Robinhood app, I now own 0.016679, which means when I hit enter, it's going to let us know how much payment I'm going to get. Boom, right there we go. Not even a penny. Well, I only put in $1, but that gives you an understanding of what you have. Now, that can be reinvested. It's called the Dividend Reinvestment Program, and it'll be reinvested in a micro share. I mean, that's a super fractional share once that date comes around. But let's say I keep adding and adding and adding shares. Well, we can go up to, let's say you have like 25.589564321, whatever. That's how many shares you own of Coca-Cola. Well, here's how much your payment's gonna be. Boom, $11.77. So you can plug in based on whatever you own. It doesn't have to be less than 1 share. It's whatever that fraction may be. Because of course, if you have 1 share, you're gonna get whatever the payment is, which is 46 cents in this particular case. But if you have that weird fractional share and you wanna make it easy on yourself and you wanna just calculate it, plug it in there and this thing will let you know right away. So if you like the idea of fractional shares, you want to get started, get yourself some free stocks. Both Robinhood and Webull are offering free stocks when you sign up and get started today. Both are linked down in the description below. Check out whatever promotional offer best suits you. Oh, and by the way, while you're at it, check out this video next, and we'll see you on the next video.